They also have something called McFerran University, and they give all the time, 2 or 3 times a month, they give three credit hour presentations to give us a little bit more CE to help us be a little bit smarter than we ordinarily would be about law and how it reflects with real estate. So I wanted these guys to come on over and talk to us about real estate and real estate concerns. So please welcome Eric and Mike.
Am I supposed to wear the, I don't know, I'm supposed, is this all right? All right. Maybe I'll.
We'll just switch off.
Yeah. See, we both work for Ed McFerran. He's got a whole family of companies, and I happen to represent the law side of things. So we're a full-service real estate law firm, and all of our products and services are transactionally based. So we don't really do a lot of litigation. And we don't do situations where, clients end up hiring us and having us on retainer for big, long, drawn-out things. Most of the things we can help people with are, I don't want to say straightforward and simple, but we have a lot of economies of scale because we do service such a large area. We bring in a lot of clients from Western Washington for our products and services. So what are our products and services? Well, anything that could be associated with a real estate transaction. So maybe homeowners are thinking about doing a 1031 exchange, or investor clients are thinking about doing a 1031 exchange. We can help facilitate that. A 1031 exchange is part of the IRS tax code, which has to do with how investors deal with capital gains on real estate property when they have a transaction. So we handle those exchanges. We're really the largest exchanger in Western Washington. There are a few others in Seattle, but up in Seattle, the market gets pretty fragmented, and we service all of Western Washington, so we actually have a pretty broad base. When it comes to short sale negotiation, does anyone here know what a short sale is? How those work? Okay, good. So we are the largest short sale negotiating firm in Washington State. We've been doing it since 2007, and when homeowners buy property, they're usually very familiar with the funding sources, only because they care about the fact that it funds and they're concerned about closing dates, but they probably don't usually ask real tough questions about who the investors are and the servicing companies and what those guidelines are. Well, when you're doing a short sale, those things that you didn't care about when you were taking out a loan become very, very important, because depending on who the matrix is of the investor and the servicing company, if you've got 1 loan or 2 loans, if you have HOAs involved, all of a sudden you get many, many layers, and every transaction is different. So a lot of real estate professionals will refer those transactions to us so we can take care of that, and they can focus on the transactional part of the equation. We also offer a free legal line to real estate professionals and homeowners with real estate related questions, where if someone has a question, they can shoot us an email, and within 24 hours we'll get a response back, and we shoot for about an hour or so. Real estate law is really very broad, so you'll find that there's not really one practitioner that can truly specialize in all of real estate law. So as a result of that, we've got 5 different attorneys that all have kind of their individual specialty, ranging from bankruptcy to estate planning, general litigation. So we've got different practitioners that have different specialties. And probably the biggest thing we're seeing right now, which is kind of unusual for brokers, is homeowners that went through a bankruptcy earlier in the recession that now are in a position to buy a house again. And what bankruptcy does is it separates a homeowner's personal responsibility to pay back the debt. It doesn't do anything to change the ownership structure of the property. So a lot of homeowners that went through bankruptcy earlier in the recession, and frankly, when folks do that, they usually are motivated by price and what the cost of the bankruptcy is. They don't really realize that there's a customer service component to what they're trying to accomplish. So they go through a bankruptcy. The debt is part of the bankruptcy, but they still legally own the house. So that creates a problem when they want to buy a house again, because they might talk to a lender and say, hey, I'm in the market for buying a house. What can I do? Lender might do a pull of credit. They've got decent credit because they've been rebuilding it. They might have good debt to income. so they might initially qualify for a loan. What happens though usually is the previous lender will start to see that activity and start the foreclosure process on the property. When that foreclosure process starts, because keep in mind they still legally own the house, they're no longer eligible buyers. So that's probably the biggest thing we've seen in the marketplace recently that's affected brokers and transactions and homeowners as well. Folks that have gone through bankruptcy, mortgage debt was part of it, but they still own the house. So that's probably the biggest thing we've seen. So I don't want to bogart all the time. Yeah.
Do you guys do any of the credit rebuilding back?
Not really. No, there's different firms that deal with that. We don't really get involved with that too much. We will.
We tried. We've teamed up with companies that you referred, and it's difficult. It's hard to even find a good credit repair company that actually stays in the industry for more than 2 years.
Yeah. So.
You know it.
So we've got 20 minutes or so, give or take. Okay. And how? Okay. What do you guys want to hear about? I mean, I could talk about. I mean, I could literally go on for hours, and a lot of the knowledge we've got is kind of very technical. So I don't want to talk at you. I want to find ways and answer questions that you guys might find interesting or relevant.
I got a question.
Sure.
I didn't raise my hand when you asked about short sales because I don't know a whole lot about it. So
Okay.
Can you explain just
So.
how a short sale works?
Fantastic, thank you, good question. So that actually is a great question because it'll maybe help give you guys some relevant stuff. So we sort of we kind of categorize short sales, folks that want to do loan modifications, people that want to enter into mediation as distressed homeowners. And when we think about distressed homeowners, we think about homeowners that owe more than what their property is currently worth. And that can create challenges for folks because if you owe more than your property is worth, you might have an interest rate which is higher than what's available right now. You could be in a situation where you need to relocate for work, maybe you're getting divorced, any one of the life changes that you guys probably talk about in some of your other networking things. When those life changes occur, all of a sudden that real estate, that asset can become a real hindrance because you owe more than it's worth and you need to liquidate it. So that's where short sales come into play, and that's when we start looking at helping homeowners and presenting different options. So a homeowner that's in a situation where they've got a house that's upside down in value and they need to get rid of the house has got a few different options. They might be able to qualify for a loan modification, and depending on who the investor of their loan is, so when we talk about loans, we think about not only who the servicing company is, which most folks are very familiar with, but who the investor of that loan is. So when we talk about servicing companies, we're thinking about banks like Wells Fargo, Bank of America, Chase, Citi, those types of institutions. When we think about investors, we're thinking about Fannie, Freddie, FHA insured loans, VA loans, those types of things. So depending on who those folks are will kind of help guide what options the homeowner has. So for $150, we sit down with clients that are in a pickle and try to figure out what their options are. So if a homeowner really wants to stay in a house but they can't quite afford the payment, we might talk about entering into a loan modification or attempting a loan modification with the lender. The reality of it is, in this day and age, when I say this day, in 2015 today, most homeowners aren't going to find loan modifications to be successful because very few folks, to do a loan modification, you have to re-qualify for the note, right? And very few folks that on paper can qualify for the note like the new payment, if that makes any sense. So you have to fit within a very narrow income band to even qualify for some of the federal programs to re-qualify for the loan. And even if folks fall within those brackets, the new payment they are going to have usually isn't compelling enough to keep them in the house if they're having problems making their current payment for whatever reason, right? So if that's not an option, then we start to explore different options. So bankruptcy is an option for people sometimes, depending on what the situation is with their servicing company and who the investors are on their note. In Washington State, we've got a very specific law, and I don't want to get too far in the weeds here, but we've got what's called the Foreclosure Fairness Act, which allows homeowners which are having a hard time with their mortgage to get a face-to-face meeting with their servicing company in the county they live in, so in Pierce County. So if they're working with Bank of America and getting really frustrated because they get shuffled around, they can actually get a meeting in Pierce County with the decision maker from Bank of America. So Washington State has the most progressive law when it comes to those types of face-to-face encounters with lenders. If a short sale is what makes sense for someone, that means they need to get rid of the house, they can't afford to make the payments, so things have changed that are outside of their control between when the time they took out the loan versus today. That would be a short sale. So we would, and a short sale has two components to it. One is making sure the homeowner qualifies for a short sale, right? So when you borrow money from a bank, you've got to be financially strong and you've got to offer a compelling reason to get a loan from a lender. To do a short sale, you have to do sort of the opposite, offer a compelling reason why you can't make the payment and why it's a good idea for the bank to allow you to do a short sale and take a loss on the property. So that's the first thing we do is sort of present the hardship of the homeowner. The second thing we have to do is establish the value of the house. So you borrowed money on a house, the appraiser said it was worth $300,000 in 2007 when you bought that house, and now it might be worth, what do you think, Rick, 225?
Yeah, max.
200? Okay. So the second part of that is when we present an offer for a new prospective buyer that wants to buy this house, why paying $200,000 for this asset the bank loaned $300,000 on is a fair price, and what makes that a good decision for the bank. So we've got to present those two things to the bank, and if we can accomplish those two things, generally speaking, we can get an approved short sale for a client. But there is all the same things that happen in underwriting when you take out a loan happen when you do a short sale, but just kind of in reverse. And the challenging part is there isn't always a lot of apparent logic and reason for what the investor's decision-making process is, which can be very frustrating for the parties involved. So it can cause a lot of folks to get very, very frustrated because it's an unpredictable experience, right? I mean, taking out a loan is usually pretty predictable. You know what your credit score needs to be, the house has got to appraise, debt to income's got to be within certain bands, and if you accomplish those things, generally speaking, folks want to lend you money because that's what they're in the business of doing. When we unwind the process, there can be some very arbitrary things which come up which cause people headaches. So, thank you. Good question. Anything else, you guys?
Clear as mud?
Oh,
Clear as mud?
Oh, yeah, it's clear, but you're
I don't want to talk. I mean, I feel like, yeah,
you're completely talking about from the homeowner's point of view.
yes,
Okay, then there's a whole other side of it, like people that buy short sales.
yes.
I don't know.
We can talk about that too. Yes. So, if you're trying to buy a short sale, and you had a question too, but okay. So when you're trying to buy a short sale, there was a period right after the recession occurred where you could really get some fantastic deals on a short sale, right? Because banks, and actually I'll back up a step even further. So the reason we even do short sales is because if we don't do a short sale, the house is going to go back to the bank in a foreclosure, right? So the idea is if we do a short sale, it's better for the bank and the homeowner than letting the house go back through foreclosure. So, and I probably should have started with that because that's kind of the basic foundation here. So early on in the recession, banks were very, very uncomfortable doing short sales. They were really much happier to foreclose. And then where I'm talking late 2007, early 2008, right? Banks would foreclose on someone with 90 days, take the house back, and become an REO property. And at that time, the market was still kind of contracting. So there was probably a point where that house could have sold for $275, that $300,000 house could have sold for $275. Banks said, no, we're not taking $275. They take it back as an REO property, put it back on the market, and a year later, they finally sold the house for $225. Well, that happened long enough that banks realized they were losing much more money than if they had just taken the initial offer for the short sale. So then when the pendulum kind of swung, and banks were very eager to start working with homeowners that wanted to do a short sale.
This is really frustrating for real estate agents.
Yeah, and it was frustrating for brokers back then, but maybe good for homeowners because homeowners would find a property they really enjoyed or they liked, make an offer for $275, be frustrated because it was turned down, and then 6 months later it'd be listed at $225, and they would buy the house for even less than what they offered, right? So it's a very confusing time, and it was really frustrating for buyers because, I mean, the one thing we say you got to take logic and reason, wad them up on a ball, and throw them over your shoulder when we're talking about working with short sales. So even my wife and I in 2008 were trying to buy a house. Maybe it was 2009. And it was a house that we were really drawn to for geographic reasons, and it was close to her sister and this and that and the other. So we were really emotionally attached to this one particular house. And we tried buying it for over a year. And we had everything we needed in a row, and the broker was working their tail off, and it never came together because they had a situation with a first and a second and a tax lien, and we just couldn't get all the parties to cooperate and get it to close. So it can be, if you're wanting to buy a short sale, it can be a good deal financially, but at one point you might have been able to get a short sale for maybe 25% under market value. Now it's closer to 8 to 10% under market value. So if you're in a situation where you have to hit a certain closing date, like maybe you've got kids which you want to start the school year in a certain school district and you need to be closed by August something so you can accomplish that, it might not make a lot of sense. But if you're looking for a property you don't have a lot of emotional attachment to and you really don't care when it closes, if it closes, a short sale is a fantastic thing to think about buying. But if you're really keyed on a house or a closing date, I would probably try to avoid it because you're just going to cause yourself a lot of aggravation. At the end of the day, if you save $10,000 or $15,000 on a house, but you have a lot of aggravation getting there, I don't know if it's necessarily worth it because $10,000 or $15,000 in terms of monthly payment over a 30-year note's next to nothing, right? I mean that's, so anyway, did that end? So thank you. That kind of got me at a more basic. And did you have a question? Sorry, I got you right in the middle of the line.
So, do you ever do for home buyers who have like the first and second, and the second has a balloon payment, renegotiate that?
Yes.
They would stay in the home or retain the property. They don't want short sale, and they don't need a first loan modification.
So we can certainly try.
One of those. Okay.
Yeah.
Balloon payments due in 7 years.
Yeah, and 7 years ago it seemed like not a big deal, right? And all of a sudden that can, so we offer consultations. If you've got a situation like that, we'd love to talk to whoever those parties are. They can come in for a free consultation and we'll discuss what their options are. The other thing we're seeing in the marketplace right now are folks that took out, and maybe I'm going too far in the weeds here, took out 10-1 interest-only ARMs in 2005, not so much 2005, but especially 2006 and 2007. Because if you were a lender and you had a homeowner or a prospective borrower that was self-employed and couldn't qualify for a 5-1 ARM or more of a conventional product, sort of the last bucket before you couldn't help them anymore was a 10-1 interest-only ARM, right? So if you took out a 10-1 interest-only ARM in 2005, 6, and 7, those are beginning to reset. And if your financial situation hasn't improved, or maybe you got divorced, or fill in the blank, and you can't requalify for that loan, all of a sudden your payment's going to go up pretty substantially.
That's the first.
Yeah.
The second, the balloon payment.
Yeah, and so, and so the idea with those seconds with balloon payments were that things would continue to improve, and you could roll that into some other product, and so, and that might be a situation where you might be able to help folks out with that type of stuff. But we can help in the event that a lender can't help find a solution. So, anyway. Yeah.
2 minutes.
2 minutes? All right. Mike hasn't even said a word yet. Mike hasn't said a peep. Mike.
We're gonna give him a couple minutes.
All right. Excellent. And I promise the stuff Mike talks about might not be really interesting until you need it, and then it is the most interesting thing in the world. And people think, title escrow, why do I need that? Well, anyway, I'm sorry. Go on. Yes.
One of the biggest frustrations I had back before you guys were even available, we were kind of left on our own to do the negotiating for the short sales.
Yep.
And one of the biggest frustrations was the second mortgage. Who's going to lose out on all of their profits at all? How do you guys go about trying to negotiate with them to find something that's acceptable to them?
So depending on who the investor of the first is, oftentimes they've realized they need to give some money to the second in order for the second to cooperate. So once again, in a short sale, we're trying to find an outcome that's better than foreclosure. The second realizes that if the property goes back in foreclosure, they're going to have, all of a sudden that second becomes the world's largest Macy's bill. It's unsecured debt, because if it goes back in foreclosure, the first gets the house, that's what they get. The second all of a sudden becomes unsecured debt following the homeowner. That second can follow the homeowner for up to 17 years. If they get a judgment, then you renew the judgment and that type of thing. But that being said, people that own second mortgages on the houses that go through foreclosure realize that the odds of collecting on John Doe is slim. So they end up selling that debt to a collection company for about, and the rates have varied a little bit, but we'll just say on average 6 cents on the dollar. So 6% is what they're going to sell that $50,000 balance to, they're going to sell the $50,000 uncollected note for about 6 cents on the dollar. It was 10 cents for a while, but it's about 6 now is what I've heard. So the first position lien holder knows that. So they realize if they can offer that second an acceptable amount, they'll get approval from the second, the homeowner will get released of liability, and the transaction will go through, because the first, keep in mind, has motivation to do a short sale because they realize a short sale yields better outcome than letting the house go back in foreclosure. So, but yeah, I'm done. Thank you. Appreciate it. Thank you. Here, Mike. Let me get this thing. I've never worn one of these before.
I don't know,
I feel like a newscaster.
special. And yet I feel so at home with it. Well, I'm going to keep mine short and sweet. So, title and escrow, what the heck is it? Most people don't know what it is. People in my industry, usually realtors, LOs, insurance, you guys all know what it is. Pretty simple. It's a company that on one side is an insurance company that investigates the property that you're going to buy or sell, and then makes sure that the property you're buying is actually owned by the person selling it, or if you're selling it, you're not trying to sell a property with 3, 4, 5 liens, judgments, and try and pass that on to the next buyer. Escrow, that's really just the specialty. That's the ladies behind the scene, the men behind the scene that actually handle the documents, get it closed, work closely with the LOs and the real estate agents, and make the magic happen. That's really the core of what I sell is escrow services. 'Cause quite frankly, title's pretty automatic. I mean, most of you probably know, realtors, LOs. It really comes down to title. That's automatic. It's really, though, your choice is who's your closer and are they going to get the job done, and do they have good customer service skills. So really, I mean, that's the essence of it. It's difficult for my position to really sell or explain to any other company besides, because I mean, most of the time, any other person, all of you who aren't in the industry, when's the last time you dealt with title and escrow? When's the last time you bought a house?
5 years ago.
5 years? Yeah. Okay. Or sold a house, bought or sold a home. Most of the general public, they don't see us for once every 10 to 15 years. So, depending on, yeah?
Now, I don't remember, was it required for me to prove title or whatever? I mean, did I talk to someone like you back 5 years ago?
Well, what do you mean? What do you mean by prove title? You mean when you want to sell your property or buy a property?
When I bought it, did I interact with someone behind the scenes that proved that I could buy that, or is that optional?
Really, the only interaction you really had with title was when basically purchasing the property. The only proof had to be on the seller side. You as the purchaser really just had to confirm whether you qualified with your LO. What's your credit score? What do you qualify for? How much down payment do you have to bring? And what's your payment going to be? And can we get it closed at a certain time? So really, that's it. So working for the Ed McFerran company, we call it the family of companies, it's been a little different for me because as sales reps there, you literally have to wear at least 5 or 6 hats. Because not only is it title and escrow, I also am a consultant for my realtors and my LOs when they're handling a short sale. Whether they're dealing with another company or a realtor is negotiating themselves, or if they're working with my company. Because still there are a lot of people out there who they get frustrated with the process, they don't know what to do. A lot of my consultations, I help realtors who are negotiating themselves, who quite frankly got in over their head and they have no idea what to do, or they got a response back from the bank that they don't know, all right, is this in my client's best interest? And that's the key thing for you homeowners and buyers. We're trying to protect your interest. So.
Most people don't know that you have a choice
It's kind of the joke in the industry is, the funny thing is, yes, the homeowner makes the decision on what title and escrow company they want, but we never advertise to homeowners because it's the realtors and the loan officers who generate the business because they're the ones that know what title and escrow is. They're the ones that regularly work with a title and escrow company and get it closed. So of course, they're going to want to choose who they trust. So the homeowner has no idea and usually doesn't care. So, but any questions about what I do? Yeah.
So in every industry, it seems like there's always some kind of scam that ends up floating around. What are some scams or some things that go on that people should maybe be aware of?
Well, we just, well, from a regular title and escrow aspect of it, I mean, we insure risk, just like Man did. So mistakes will happen. Like for instance, we just, Eric, when did that incident you just told me about?
That was about a month and a half.
Yeah. So basically, a homeowner decided to sell his property, was able to finagle his name and transfer some ownership issues between two different properties, and quite frankly had multiple judgments against this one property and was able to sell it, get the proceeds, and take off. Well, the brand new homeowner, several weeks to several months later, you know, he's enjoying his brand new home, you know, bought it for a good price. Now just to receive a letter from an attorney stating that, yeah, you owe about, I think it was something to the tune of
$2.25, I think.
$200,000 you are now liable for. You just bought a home and you now owe $200,000 additional that's attached to the property.
That's because he didn't go through somebody like you.
Absolutely. But at the same time, it's a good example of what title insurance does. Because now that gentleman, since he called his friend saying, hey, what do I do? Well, you called the title company that insured it. And as long as they did their due diligence, their job, and their job is to protect that homeowner. This is where you, the general public, like Eric said, nothing about this is interesting until you're in a pickle and you need the service. So obviously he found title insurance very interesting at that moment. So he obviously would set up his claim and make sure that that title company who issued title and closed that transaction would pay that outstanding bill. So.
What if you have a lien on your property? How does one get rid of it?
Say it again?
What if you have a lien on your property?
Well, it all depends. Do you owe that lien? Do you owe that lien? Is it yours? I mean, is it a debt that you raked up? If it isn't, then that's where you probably, in your situation like we were talking earlier, you have a lien against your property due to identity theft, other aspects. That's a specialty of our law firm. That is where you'd have to consult with a real estate attorney. They'd have to investigate to find out, all right, how is the lien attached? Who's the company? What is the amount? And work it from there. So, all right. All right, short and sweet.